The Strait of Hormuz is the only thing that matters. If it's open, then we can talk about all the other stuff, and all the other stuff matters. If it's closed in 3-4 weeks' time, I recommend they start stocking up on essentials.
Welcome back to Metals and Miners. I'm your host, Gary Bohm. Today we have a critically important discussion to work through with Luke Gromen regarding the Iran war, oil and gold prices, the anticipated economic impacts of it all, and of course, AI. Luke, it's an honor to have you back on Metals and Miners. Welcome to the show.
Thanks for having me back, Gary. It's great to be here.
Luke, you have a 3+ decade career in economics, the markets, spanning multiple cycles, wars, and world events. You have an uncanny ability to connect dots across multiple planes, asset classes, and geopolitical theaters to help investors better navigate the incredibly complex markets. There's a lot to discuss today. Before we do, what's the big takeaway for those tuning in that you hope they walk away with after listening to this conversation?
Strait of Hormuz is the only thing that matters. If it's open, then we can talk about all the other stuff, and all the other stuff matters. If it's closed in 3-4 weeks' time, I recommend they start stocking up on essentials.
Okay, well, let's get into this. All right, let's begin with the war. What ramifications do you see that are currently baked in the cake in your estimation, and what are the second order of effects that you're now expecting from those?
I think it's still pretty early to tell. I think some of it depends really what happens in the next 2 to 3 weeks, really. For me, the only thing that matters, Hormuz open, Hormuz closed. And I think there's some, look, if Hormuz is still closing in 2 to 3 weeks, 4 weeks, it's going to be the worst economic crisis in anybody alive's career. It will, and it'll be the worst of COVID and the worst of the great financial crisis put together. And so that's the really big item to focus on. The challenge within that is that it's highly political. There's a lot of fog of war around it. I will say the longer it goes on, the more the world's economies are going to converge towards Iran's economy. And that's not a good thing. And so if I'm the Iranians, I'm not even going to show up at the negotiating table. Why bother?
Can I just interrupt for a sec? When you say the Iranians, do you mean the Iranians at large, the broader population, the people of Iran, or do you mean the controlling group of people that took over 47 years ago? Or are they one and the same?
The government of Iran is who I'm talking about as far as this is concerned. So for me, we knew the U.S. has a lot of weapons and can blow stuff up. There's no question about that. And they've done that. And we've been accentuating that in our media, et cetera. But it's not what matters. At the end of the day, is the Strait of Hormuz open or is it closed? And I think one of the key takeaways of this war very quickly is becoming, there's really not a lot of, this is quickly becoming the best case scenario for Trump and the U.S. neocons is to suffer a strategic loss, like Suez in 1956. That's quickly becoming the best case. The longer this goes on without them being able to open the strait, the bigger a problem it is.
Okay. So as far as baked in the cake problems, maybe a little early to say that, but we're rapidly getting close to the point where, things will be baked in the cake and there's no turning back.
Yeah, and those problems are going to be in stagflation, gas shortages in parts of the world. That's going to be a Western sovereign debt market problem, which you started to get a little glimpse of at the end of last week. even on Sunday night until we had this, Trump pronouncement that the war is going to be over. And this is what I mean about the fog of war. They say they're negotiating, and they gave a name of the guy they're negotiating with, and that guy came out an hour later and said, yeah, I'm not talking to them, and we're going to continue this war. So it makes it for very,
Yeah, last year during the tariff explosion, when U.S. and China were doing this with their tariffs, and it went up to, I don't even remember, what was it, 130% or 140% at one point. Trump came out and said something similar. Hey, we're negotiating. They want to negotiate, And they came out, China did, and said, no, we're not negotiating. We haven't done that. Very similar to Iran, but literally less than 3 weeks later, there was an agreement on a 30% cap. And so it seems, retrospectively speaking to that situation, it seemed like China was maintaining some element of negotiating power in the press and in the public sphere by saying that while still negotiating. Is it possible that that's really what's happening here with Iran too?
Maybe. It depends. If I listen to Western media, Iran is completely irrational and they need to be wiped off the face of the earth to make us all safe. And then that same government is also going to rationally sit down and negotiate with Trump, according to those same people. So I don't know who, when I listen to the same people, which Iran are we getting? The Iran that our government and our media says is completely irrational, wants to kill us all, and so we have to go to war? Or is it the rational ones that are, because if they're that rational in the first place, why do we go to war with them? Everything we are going to war with them, one of those two things is true. It seems like both can't be. So I think that's the difference this time is, same thing we've seen with the missiles, right? Hey, 6 days into this war, people were just showing you the chart. Look, they're going to stop. They're going to be out of missiles by day 10, day 11, 12, 13, 16, 19. They're actually shooting more missiles now than they were 10 days ago. So that's why I say fog of war. I think there has been a gross miscalculation made by this government about the implications of this. We were in a bad enough position. We could not afford to have higher oil. The Treasury market could not afford it. We're starting to see that. We needed to get rates down. Rates are going up. Don't forget, the entire plan was to move Treasury issuance to the front end so we could then cut rates and reterm our debt. What are short rates doing in response to this war? Did anybody think about this in the Defense Department? Did Trump think about this? Did Besson think? Did anybody think about this? Apparently not. Because if they had one person go in there with like half a head on their shoulders and say, hey, oil's going to go up. They're going to close the Strait of Hormuz. Short rates are going to go up. You have a debt problem, right?
So the current Trueflation US CPI index is showing an inflation rate of about 1.73% right now. Many are worried that the oil price spike is going to lead to a big rise in inflation and ultimately a recession. Recession has occurred in 5 of the last 6 instances of an oil price spike going back to the 1970s, with the lone exception, being the 2022 invasion of Ukraine by Russia. At that time, oil hit $123, which is $143 today. We haven't quite gotten there yet, but today we're hearing similar recession fears like we did in 2022, 2023, 2024. It just never came. But, Dr. Ed Yardeni has showed a great chart that shows that the U.S. economy requires significantly less energy per unit of GDP than in earlier decades. I don't know if you've seen this, but it basically reflects the efficiency gains and a shift away from the manufacturing economy towards the services economy. Do you think that these factors, including the fact that the U.S. is the largest producer of oil, do you feel like these factors somewhat insulate the U.S. from runaway inflation, which used to result in recession caused by oil price spikes?
I think it just delays it. Right? Like that manufacturing didn't go away. It's just, when you account, I would love to know how Yardeni counts for that, because ultimately we're running a $1 trillion a year trade deficit, maybe just short when you X out gold. And, that's all being made with energy. It's just being made somewhere else, right? And so when we hear of disruption of trade in Asia as a result of what's happening in oil, that just means the Asians are going to either, you're already starting to see it, right? They are restricting exports. China and others are restricting exports of energy-related goods, refined goods, et cetera. Was hearing on X all weekend about U.S. manufacturers not being able to get components because they were energy, things in plastics, and they need to be made there. And so price increases were already coming fast and furious. So, maybe the U.S. can try to operate at a loss, force the Chinese to operate at a loss, and then it won't show up. But the energy is still there. It's just been moved from the U.S. to Asia. Do I think it'll be a recession? Yeah. If Hormuz stays closed, we're going to get something far worse than anyone alive has seen. If it stays closed another 2, 3, 4 weeks, and I think there's a lot to suggest it's going to stay there. And I think that is the number one. I think that is the number one thing, far and away.
Is it fair to say that the U.S. is on the clock here, or the U.S. and Iran is on the clock here, to stave off a global economic catastrophe that nobody alive has ever seen? They've got 2-3 weeks, maybe 4 max, and then otherwise, what will be baked in the cake will be impossible to turn around. And is it also safe to say that even if they're able to do that in 2, 3, 4 weeks, that there is actually an element baked in the cake with some of the stuff you've just talked about, the plastics, maybe fertilizers for food prices, et cetera, that we are going to see increases in prices that's unavoidable, that will lead to recession, or not necessarily lead to recession if they're able to get this thing knocked out in 2, 3, 4 weeks?
I think it could lead to recession. I mean, even if we go back to the 2022 instance, like there was a recession in all but name, right? People say, well, GDP fell for 2 straight quarters at the time. I think that's been revised away since, but they did fall for 2 straight quarters, and ISM was recessionary, and there were a lot of different recessionary factors. Tax receipts fell sharply. That was recessionary. The only thing that didn't fall was employment. And then, if I'm not mistaken, didn't we just revise all those jobs that kept us out of a recession from 2022? Didn't we just revise those away after the fact? So did we have a recession or did we not? And I think it'll be much of the same, which is receipts will fall, employment will fall, ISM will fall, profits will fall. Will it be a recession? No.
So that's what we're expecting. That's what you're expecting as your base case now, but something much worse if in 2 to 4 weeks they don't get this thing solved.
Yeah, I mean there is a astonishing amount of complacency around the supply chains and how they will break down in a cascading manner if it stays closed. And 40% of the world's sulfur, 40, a lot of it's, that's going to shut down copper mining. Copper mining, how are they going to build more AI, more grid with copper mining or copper production declining? Biggest aluminum smelter in the world is shut down, right, or winding down operations in Bahrain. So how are we going to build the grid? And then when prices rise there, there's just an astonishing complacency around that. And, that is by far the number one factor.
Okay. Over the last several weeks, Luke, Gulf states, Bahrain, Kuwait, Saudi, all of them have reported intercepting numerous unprovoked Iranian drones and missiles, including IRGC, targeting U.S. bases in these areas. They've become outwardly aligned with the U.S. in multiple instances towards Iran, and they're now telling the world that they're pursuing back channel talks to end the war, but they've also threatened to enact a longstanding Gulf Cooperation Council pact that would bring more than a dozen of these countries to bear alongside the U.S. and Israel in a direct war against Iran. What impact do you expect this group to have in bringing about any kind of resolution to this war?
Not much. The problem is what's a wider war do? It's exactly what Iran wants, right? Why wrestle a pig? You get dirty and the pig gets happy. And what's going to happen to oil? Like I am fascinated, and I've seen it now, saw it with COVID, saw it with Russia, the Western media takes anything that Putin, Netanyahu, and Bessent say as gospel from on high, and anything the Iranians say is absolutely to be disregarded. And the truth is somewhere in between. And so the former head of the IRGC came out 3 weeks ago and said, listen, you guys screwed up. You thought we were going to have a short war. You can see this. And he went chapter and verse. We can see your logistics, and we can see from your logistics you were prepared for a short war. But now it's not a short war. And we're going to make sure it's not a short war. And so your logistics are not prepared for a long war. And our strategy in all of this is to just send oil to 120, because we know if we get oil to 120, your bond market, your economy is going to collapse. That's the whole strategy. And so that's why I say rolling around in the mud with a pig, great. So now you're going to engulf the entire region in a war. What's oil going to do? 140, 160? And I would also say, from what I'm hearing on the ground, it's less black and white than our media makes out about, a unification around the GCC, on the U.S. side. Yes, in some areas, but in others, not. Like the Iranians said, if you hit us, anyone who is hosting U.S. weapons is going to get hit. Today in the Wall Street Journal article, they have found missiles that have hit Iran that are 200 to 300 mile range missiles. Okay, where did those come from? Well, they must have come from GCC countries. And where those countries have hosted bases, the Iranians have hit. And so, yes, it's hurting Iran, but it's also helping them, because I've heard multiple instances of these countries no longer wanting to host U.S. military bases, no longer wanting to refuel U.S. ships, because they don't want to get hit by missiles. And the United States military has shown an inability to stop those missiles. And according to a lot of sources, the U.S. and Israelis are largely out of air interceptors, missile interceptors. So that's why, if I'm the Iranians, and this I think is people are I think wildly underweighting this risk. Number one, every negotiating team the Iranians have put out there has been assassinated. Started in Doha last fall. You could argue it was Suleiman at the airport in Baghdad, or wherever that was, under Trump's first term. Then Doha last fall. Then this last, the decapitation strike. So number one, no one's going to be really excited to be. And oh, by the way, smooshed in between there, the Russians said that we and the Ukrainians tried to conspire to assassinate Putin by having him take a phone call with Trump, and then the Ukrainians tried it. And we said we didn't do it. The Ukrainians said they didn't do it. The Russians said you did. Who knows? We do know his palace was hit by a drone. So there's a pattern of negotiators being assassinated when they're supposed to be given good faith. So number one, how many times they have to see it before people in the West start going, maybe they're not going to negotiate, number one. And number two, if they just don't negotiate for 2 to 3 more weeks, they're going to get their collapse the economy outcome. And, when you start seeing Bessent do things like unsanctioned Russian oil after the Russians have been reported and admitted targeting U.S. assets, and unsanctioning Iranian oil, and then trying to spin this on national TV, like these are very much shades of General Westmoreland in Vietnam, where it's like, no, it's all going great, guys. Like, we're killing a lot more of them than we're like, yeah, but you're not winning, right? We killed lots more Vietnamese than they killed of our guys. We didn't win, though. And that's I keep coming back to. Yes, but is the strait open? And that you ask anybody who's like, yeah, yes, but is the strait open? And the conversation, they just shut it right down. And there's a reason why the strait's not open. It's going to be very, very hard to reopen.
Okay. All right. So before the war, the BRICS were making great progress on de-dollarization efforts, especially progressing their oil sales in alternative currencies. Last year, in an interview, President Trump stated that losing the global reserve currency would be worse than losing a major war for the U.S. and would plunge America into a financial calamity. He then stated in the same interview, "We will not let that happen." In your view, is this around the BRICS and the potential, all their de-dollarization efforts and the focus on getting away from the dollar, is that part of the reason for the start of this war? And has it strengthened or weakened, in your opinion, the BRICS de-dollarization push?
I think there's a lot to support that it's at least a factor in it, right? They're going after everyone that's selling oil in yuan, right? You got a proxy war on Russia's borders. You've got, this is now 4 years old. You've got Venezuela. You've got Iran. That's kind of a big part of the club of yuan oil. And so I think it's at least a factor. Is it helping? I don't know.
Did they have a choice? I mean, what if they waited until the dollar lost the reserve currency and it behaved like President Trump was suggesting it would, like losing a major war? Would they be in a much weaker position than to start a war at that time?
You know, it's almost a case where they waited too long anyway, right? I mean, right now, who are we dependent on to replenish our military supplies? China. We can't go to war without China. China has shut down tungsten. Shut down tungsten supplies. They've shut down rare earths. And so, there seems to be a attempt to squeeze China's oil supplies to give us the leverage to say, hey, you send the rare earths or else we cut off the oil. Number one, China's still getting a lot of their rare earths, or excuse me, a lot of their oil. Number two, the Iranians have come out and said anyone who pays in yuan, is free to sail through. And they've said, or Chosun, the Korean paper, reported there's 8 countries. The Iranians have said they are negotiating with 8 non-Middle Eastern countries to buy oil in yuan. Who knows if that's true, right? Again, fog of war, take it with a big block of salt. But if that's the case, I would say the war's done the exact opposite. If that was what we were trying to do, like, heck of a job, Brownie, right? For those of us old enough to remember Katrina, what a goat rodeo that was. Like, it's not working.
Well, we kind of heard that, the Fed has been in a box. It feels like with the BRICS movement, the de-dollarization movement, the what it would mean to lose the global reserve currency. It feels like, plus all the other factors with China, the history with Iran, it feels like the U.S. was in a box to some degree, was going to have to make a move at one point or another against this consortium, and maybe felt like they didn't have another chance. I don't know. It just seems like there wasn't another option when we talk through some of these things. If the BRICS de-dollarization push was sincerely part of it, of the calculus.
Yeah, I think ultimately, we can't reindustrialize without China. We can't reshore without China. We can't go to war without China. And so, and all of these things, that's not to say China has all the cards. This is all a giant game of order of operations, right? So right now, the Chinese are thinking about needing to start tapping their SPR or their stored oil to the tune of 1 million barrels a day, maybe starting sometime in the next month. Okay. Well, how long can they go at 1 million barrels a day? Well, they've got 1.3, 1.4 billion barrels. So they could do that for nearly 4 years, which then takes us right back to my initial point, which is if Hormuz stays as closed to next 2 to 3 weeks, Western economies implode. Now, will China implode too? Will their demand shrink? Of course, their demand will shrink. Global supply. But all else equal, I would rather have more factories and less paper in that world than more paper and financialization than factories. And And meanwhile, if I'm Russia, who's been being targeted by the West, gone after by the West, my optimal strategy is to keep supplying Iran, keep helping them target Western assets, and keep that thing closed for another 2-3 weeks. And nobody seems to, everyone's like, well, we can overpower Iran. Yes, we can. But what about Iran plus Russia? What about Iran plus China? What about Iran plus Russia plus China? Because that's who this is against. And I don't think we can overpower 2 of them, let alone 3 of them.
If there are supply lines coming from there, won't that be visible to the aircraft? Wouldn't they stop that or attempt to stop that? I mean, wouldn't that be an escalation point here that would need to be militarily factored in? We don't need to dissect it. I'm just, that's really,
you would think so. Yeah, you would think so.
Yeah,
I mean,
I would think that would become an escalation.
Yeah. Now you've seen like truck supply lines in from, I don't know, what, Azerbaijan or something like that, right? There's a train line, if I recall correctly, from China straight into Iran.
Some of that stuff might get taken out if they discover that those supply lines are feeding them. But anyway, yeah. But to your point,
but then goes back to the point is now we're at war with China. Which stocks do you want to own if the United States? Which company in America, right? Corporate America has spent the last 15 to 20 years borrowing money to buy back stock. They've optimized their supply chains for efficiency, and they all go back at some point to China in some major way. And now we're going to go to war with China, and those supplies are going to stop. What's the value of the S&P 500 with its debt load that they use to buy back stock when they start having to shut down companies, factories, et cetera, for lack of supply chains? Here's a close optimization of what the S&P is worth.
This is a no-win situation, though.
This is what I'm saying. Like, we never should have done this. This was the dumbest thing to have done because we can't get out. Like, the best case is this is a Suez 1956. That's the good case now.
Okay. From your view, is the U.S. completely out of options to decimate the regime controlling Iran enough to get the Strait of Hormuz opened? And does a potential coalition of Arab states and other countries, including Japan and some from Europe, sending warships to the Strait to assist with keeping it open? How does all of that potentially change the calculus in getting and keeping the Strait opened?
Yeah, so I'm going to defer to the war fighters I've talked to about this, including some former Navy people that used to sail in those waters. It is so narrow, you can only go single file, right? So we're not sending destroyers in there right now because they'd be sitting ducks. What I've told is a move on Karg Island would be, quote, a knife fight in a phone booth. It would approximate the opening scene of Save It Private Ryan, where you would take 80 to 90% casualties. So those Marines, if they're given those orders, they will go. And the American people aren't going to like the video of 5,000 Marines, 4,500 of them getting cut down, because that's what's going to happen. Unless the one thing we have, that I have no idea, do we have some sort of special weapon, right? Like, we were all highlighting this discombobulator weaponer that they allegedly had in Venezuela and used. Where's that thing? Because the discombobulator is starting to look like we paid off people not to shoot at us, which is things we've done in other theaters around the world, less aggressive theaters around the world. So we're, another former warfighter pointed out, like, guy named Matt Bracken on X has been posting, look at the size of Vietnam, South Vietnam, and look at the size of Iran. He superimposes South Vietnam over Iran on a couple of these images. And then he lists the assets we had in place. And we could not, and we could not win that war. And so you're talking about a country that is more than half the size of the United States. These drones are made in a decentralized manner. And another warfighter said, look, the only way we're going to stop these drones is you would have to literally blow up every building and vehicle in the entire country, a country that's more than half the size of the United States. And now look at the ships and the assets we have dedicated there. Look at where they've been hitting. They've been hitting along the coast, sure, but they're not getting anywhere further in. Then why are they not getting anywhere further in? Well, if we had a complete air dominance that we say we do, they should be, but they're not. Why? And so again, for me, I'm not an expert on these things. I talked to some people that are experts on these things who all keep saying the same thing, which is, another one said, Luke, you need to read up on the Battle of Gallipoli from, World War I. Again, same type of dynamic, bloodbath for the Brits. Nearly end, or it did for a time, end Winston Churchill's political career, which is something maybe Trump might want to read about. Maybe not. Maybe he doesn't care. But there's this view of in economics is the old joke, right? Assume a wrench, or assume a can opener, right? There are people stuck on the physicist and a electrician and a economist stuck on a desert island, and we don't have any food, and the can of food opens here, and one guy's like, well, we can maybe jerry rig this or jerry rig that. The electrician's like, maybe we can do this, and the economist is like, yeah, assume a can opener. I read a lot of this Wall Street stuff these days, and it's like, well, we're going to take Carg Island. It's going to be our asset. And that's assume a can opener. They are going to have to sail Marines on a landing ship, single file, and look how big they're going to have to go, right? And again, we can't get a destroyer through there now. So now you're going to get all the way there into a knife fight in a phone booth. And oh, by the way, what's the American public going to do when those boxes start coming home with those boys? For what exactly? Because again, are they rational? Because are they rational? Or they were going to kill us all. It's one of the what? I don't think people understand the degree of mistake that this is.
You're making me think though of. Do you remember General Schwarzkopf in the first Iraq War back in what was that 92-ish?
Yeah, 90, 91. Yeah,
91. Do you remember what they ended up doing? They ended up taking excavators and stuff, and they basically plowed the lines where the Iraqi soldiers were and buried them alive in the sand. They never had to really fire a shot. And so they were really creative with how they went into the area. And so, I don't know, part of me believes maybe I'm a best case scenario thinker when it comes to, war, that it won't be the worst case scenario and that they would be processing what you're talking about here. And if the civilians understand this, that they would understand this and that they would be thinking a little outside the box, hopefully, if they're going to send those Marines in there. Or these are our sons, our brothers, our neighbors. So let me ask you this.
There was a real, this is, I watched General Colin Powell's chief of staff from that war. Is a guy named Colonel Lawrence Wilkerson. And he gave a podcast the other day. He's still alive. He said, in that first Gulf War, we put the 82nd Airborne on the border of Kuwait in Saudi Arabia, just across the border, Kuwait, Iraq. And that was basically to try to hold that ground. He said, but that was light infantry. We knew for a fact that if Saddam turned and went hard into Saudi Arabia, they would tear through the 82nd and they would all be wounded, killed, died, or they'd be overrun. And we knew that, and we were okay with that because A, we didn't think it would happen, but B, it would give us an additional incentive to sell the war to the American people.
Wow.
Yeah. So I'm a little skeptical
about their willingness to protect the soldiers.
The Marines, if the Marines are going to go, they're if they send those Marines, it's going to be ugly. I mean, because again, I'm talking to guys that have served in those areas, etc. Look at the terrain of Iraq versus the terrain of Iran. Iraq's flat. They could bulldoze it. Iran, the mountains come right down to the ocean.
Right.
It is going to be like Afghanistan. And we were in Afghanistan for 20 years, and we succeeded in killing a lot of kids and taking the Taliban from Afghanistan from the Taliban and giving it back to them and, torching up $3 trillion. But we did do a really good job of apparently supervising massive increase in opium.
Hey, we gave them 80 billion in aircraft and munitions too. So, parting gift.
Yeah. Hey, so I'm optimistic, but I'm not. I would be more optimistic if more people were more concerned, and if all of the people I talk to that are war fighters that have done this, they're all telling me the same thing. And I don't mean to be alarmist, but they're like, Gallipoli, disaster. Battle of Guadalcanal. That was the other one. These Marines are going to get their next battle of Guadalcanal. I've read about Guadalcanal. That's what they were going to walk into on Karg Island.
If you were to counterbalance this, throughout history, there's moments like the 1962 Cuban Missile Crisis or before the fall of the Berlin Wall, where things seem so dark. I mean, everyone was assuming that it was going to end in absolute disaster. And there was no other alternative. There was no turning back. This is where we are. But yet somehow it was human nature that people found an off ramp. They pulled it back from the brink. Do you feel like there's no end here, that there's no choice but for everybody to walk to the darkest point here, and it's going to be, the worst calamity? Or do you feel like there's still an off ramp from a human nature standpoint where this can be salvaged?
I hope there can be, but look, if regardless of what we may think about the whole regime, they killed the Pope on the steps of St. Peter's in the middle of Holy Week. That's what we just did by killing Khomeini during Ramadan. And so now it really comes down to, what would we do? What would you do? I don't know. My whole thing is like, I'm just trying to weigh the options, and I'm trying to weigh the possible outcomes against what the markets are pricing and what I'm being told. And the markets, to me, are just they're astonishingly complacent about this. So I don't know. I think I'm hopeful ultimately we pull back. But again, we have 2 to 3 weeks before supply chains really start breaking down. And, so who knows? I'm hopeful we will pull back, but I would feel a lot better about making that assessment if the markets were a lot more scared than they are.
So the 10-year Treasury, you talked about it earlier, it's moved from about 3.95 to 4.4 since the start of the war. Gold has sold off hard as rates have moved higher. And usually a move like this in gold signals a deflationary crash. The U.S. has, this $39 trillion in debt, over $1 trillion in debt servicing costs. And it's going to go up very soon, because there's something like 10 trillion that needs to be rolled over. There's not a ton of desire or capability globally to continue to fund the escalating U.S. largesse or the war machine. If deflation is in fact what is coming, what actions are you expecting the Fed to take, and what's the second order of effects we should be looking for?
I'm not sure it's selling off because of deflation. I think it is selling off I think if you take gold sell-off and multiply it by a factor, that's what's coming for the S&P, for NASDAQ. In other words, if gold's down 15% off the highs, gold's telling you that if nothing changes in Hormuz, the S&P and NASDAQ are going down 30, 45%. Because I think this is the first warning signal of global sovereign debt default. Supply chain breakdown will lead to decline in economic activity, which will lead to decline in receipts. And the United States going into this.
Are you describing a deflationary impulse?
Not once they start defaulting on sovereign debt. I mean, yes, but it's a paradox, right? Like what the fiscal year to date through February. So 5 months of the fiscal year. Now take it with, understand that April's the big fiscal receipt year of the whole year, right? So we still have that on the come. But October through February, the U.S. Interest expense plus entitlements is 104% of receipts. And receipts are probably going to go down. And that includes a bunch of tariffs that the Supreme Court just ruled against. So it's probably closer to 110% if you assume 80% of those tariffs go away at some point this year on a pro forma basis. If receipts go down, which you would think they would in an oil shock if it lasts too long and a recessionary type environment, you're looking at 120% of so that's going to be a U.S. dollar up, everything else down environment that gold is warning about. But at some point along that path, and not very long, 120% of receipts just on interest and on entitlements means they have to print 20% just to pay the interest and the entitlements. Do you think they're going to default on interest, or you think they're going to default on entitlements? I don't. And that's what the paradox. That's why it's inflationary. They can't afford it. And
they'll sacrifice the dollar.
That's right. And so I expect, I get why gold is selling off. I thought it could sell off a little. I honestly didn't think it would sell off this much. It is very much a surprise. But I don't expect it to last much longer because we're getting into a sovereign default scenario, and sovereigns don't default. They print money.
Okay. It was recently reported, you kind of touched on this earlier, that the U.S. budget deficit dropped by 25% to its lowest level since 2009. And the main reason was gold exports. And they were the largest item by value total for 3 of the last 4 months. So presumably China's demanding settlement in gold for certain strategic metals that they deem unworthy of trading U.S. paper currency for. And that's the reason for the U.S. gold exports. But here's where I really want to get into. Since the U.S. reported gold stock of 8133 tons, it's unchanged in the last 4 months. And so what gold do you believe they're sending to China for payment? And since they're being forced to settle in gold now, would you say that ultimately it would be your contention that the U.S. wants a much higher gold price so that they could slow the depletion of their gold reserves?
Yes, I think a higher gold price is in their interest. What gold are they sending? My guess is that there's probably a shadow gold price. In other words, Treasury could go out and buy gold at, if this is official movements, right? Some of this might just be, hey, we're sending you dollars. And let me back up. The Occam's razor explanation is probably that we're sending dollars over there and the Chinese are immediately turning around and buying gold from American sources, right? This is non-monetary gold, so it has to be reported in IMF data. Monetary gold, which is what our 8133 tons would be, would not have to be reported if it was being moved in or out, for that matter. So who knows what's happening there? Sometimes it's reported, sometimes it's not. Central banks, there's some signaling aspect to that, is what I'm told. So that's the Occam's razor explanation. There's another potential explanation, which is the U.S. and China, or et cetera, have agreed to say, hey, we will sell you rare earths and we will do it at gold valued at, I don't know, $10,000 an ounce. And so you send us gold that we mutually agree we will to value at 10,000 an ounce or 7,000 an ounce for that amount for whatever reason. And so the U.S. can then buy gold in the open market at whatever, 4,500 and turn around and flip it to the Chinese. And the Chinese are, it's going to be valued at that. That's something that can work. We get value back. Would we do that? Maybe. There's something to be there. There are those that have, their credible sources have written that there was a similar type of deal, gold for oil like that in the early 1990s after the first Gulf War for a little bit with the Saudis, where the Saudis lowered oil prices on our screens, but the actual price didn't change. There was $30 to $15, $15 plus a couple grams of gold per barrel valued at some higher number. And that would be a quid pro quo. So that could, that something like that could be happening. Who knows? But I think it's what's irrefutable is that we are de facto settling a portion of our trade deficit in gold. Like that's
being reported.
Yeah, that's not debatable. That's happening.
Yeah, and do you believe that maybe the U.S. grabbed some gold on the way out of Iraq and also Venezuela this time, and maybe could be using that stash that nobody, is accounting for?
It could be some of that. Recall somebody last year in the first quarter brought back so much gold or imported so much gold into the United States that it actually pushed the economy into a technical recession. If you remember, GDP was running down 4 or 5% because they so much so they stripped out gold imports to sort of normalize the numbers. And so, who was that? Who knows? But to move that much bullion, my odds are that there was U.S. Treasury bringing it back from somewhere. whether that was London or whether that was from the Vatican. I've heard that the United States the Vatican has long been a repository for official gold, sort of the BIS before the BIS. Remember, Vance went there and met with the Pope right around Easter, right before the Pope died. And then the next day, Trump tweeted out, hey, whoever has the gold makes the rules. Like there was a lot of weird stuff around gold happening early last year. So it could be some of that, but who knows?
All right. So in the mid 70s, after gold bottomed, it did another 8.5 times higher for a total of 24x from bottom to top in that decade. Oil essentially did a 10x in the decade. Silver did a 38x. Of course, there was this deflationary type recession for the most part in the middle, but debt to GDP in 1980 was like 31%. Now it's about 125%. What's your recommendation to gold holders right now?
I would buy on weakness. This war all but ensures a massive debt fiscal crisis across the West. Even if it resolves favorably over, it's everything sort of, done and done. Are you going to store your money in stable coins after watching what you've watched? Dollar stable coins? We're trying to take an island. You really want to put your money in a digital stable coin that the U.S. can burn up at will? Good luck to you. I think I think it's only going to increase gold's attractiveness as a neutral reserve asset. And that's like the best case.
Do you feel like the, those $15,000 to $20,000 call options that are out there at the end of this year is maybe some insider baseball on some of this activity, knowing that or surmising that there's a high probability that they weren't going to be able to accomplish the goals? Possibly.
I don't know. I've seen those. They are intriguing. There seem to be decent sized amount of buying. Who knows? The math. I just don't know. I mean, it is very interesting. I will say that.
Okay. Regarding AI, Luke, in the movie Margin Call, I'm sure you remember this movie, Jeremy Irons plays the CEO of the big financial institution. He says, if you're not first, you're last. So we're kind of switching gears here. Several weeks ago, Jack Dorsey, the founder of Twitter and Block, he laid off 40% of the Block workforce. He cited AI efficiencies, not that his company needed to do this for cost savings. And then the market rewarded them with a 27.6% gain in one session. All companies saw this. They had to have. They learned, and they have to be seeing the playbook and talking about this within their own companies. Do you expect there's coming a time here over maybe this quarter, next quarter, the quarter after, where we're going to start to see like a significant amount of early movers who are citing AI efficiencies and they're figuring out ways to drop headcount? But then beyond that, there's going to come a time when that next tranche of movers are actually punished by the market, because now they're like, well, this is beyond efficiency gain. This is actually, you obviously need to do this based on X, Y, and Z. And so we're going to transition from a market that rewards these companies to a market that punishes these companies for doing this.
In a word on the first question, yes, I think we're going to see a lot more of it. Meta just laid off 20% of their workforce, or announced it a week or two ago. There's an account on X called Tech Layoff Tracker, I think it is. And whoever this person is, been doing some really interesting work, but he was just saying that today that he's spent the last several weeks meeting with various chief technical officers around, from small companies to Fortune 500s, et cetera, like last 2-3 weeks. And the number they're all arriving at is we're going to take workforce down by 70% over the next couple of years, over the next 2-3 years. Andre Karpathy, real well-known AI expert, came out with something last week that looked at all 342 classifications of jobs in the BLS, Bureau of Labor Statistics, and basically came up with an algorithm to sort of rate their risk of of job disruption, and 25.2 million jobs are at very high risk of disruption. Another 34 million are at high risk. 59 million jobs, very high or high risk, and it's all white collar stuff. And so it's I think you're starting to see the market take it out on consumer credit, right? You look at the charts of companies like Capital One, American Express, KBW Bank Index. They're starting to trade like there is a consumer credit crisis coming, because I think there is. Private credit has started to say, oof, these consumer loans are not so good. There was a big one, Stoneridge last week was reported a buy now, pay later. They opened it up for withdrawals, and they only let people take out 11 cents of every dollar they had in. So I think the market will reward the early movers from a profitability standpoint for a time, and a lot of those are very big companies. It's already, I think, starting to haircut the companies that are close, either most going to be disrupted by AI, right? So software we've seen, and it's got hit in February. It's bounced back a little, but I think anything consumer credit facing, I think we are sprinting towards a consumer credit crisis, because all these white collar people took on student loans, mortgages, credit cards, car loans under the expectation. I mean, we have a friend who, the woman, graduated top honors high school, went to an Ivy League, top honors in economics, couldn't find a job, went back to grad school at that same Ivy to improve her chances, got her degree in 1 year instead of 2, speaks 4 or 5 different languages, and still can't find a job. And so literally the world has changed from the time she went to school 5 years ago to the time she's getting out. Entry-level unemployment is rising. And so I think what we're seeing in consumer credit facing companies now is what's coming, is how we'll see it manifest in terms of the market starting to be punished for what these companies are doing, which is at some point the market goes from, hey, this is great, look at all this productivity, to holy cow, who's going to buy all of our stuff?
Exactly.
And I don't know when that moment is. I'm not. When you're seeing the KBW Bank Index roll over, when you're seeing American Express roll over, when you're seeing Capital One roll over, those are your leading indicators. When those go first, that's what's going. I'm watching those companies.
Does the war give cover or even reason, like legit reason, for these companies to reduce headcount in favor of AI?
It's funny you say that. I said to my wife when we started this war, if you remember, like the week later, we had a 92,000 jobs lost in a month. Like if we hadn't been at war, that would have been an indictment of Trump's policies. It would have been the biggest macro news of the year, arguably, certainly bigger than even, the week before when we had or the 2 weeks before when we had Block or whoever it was lay off all those people, right? It was like, oh my gosh, here it is. No one even noticed it. It was like, oh yeah, oh, by the way, the job market sucks. And so
wow, maybe we're on the brink of what you've been talking about, this impulse going through with AI laying people off, and the war is stealing the headlines from that.
I think the war's stealing the headlines. It reminds me, the old 90s movie Wag the Dog, right, where the economy stinks, so the president goes to war. So I said to my wife, I said, so I don't think they'll, who knows what a company will do, but to me, a couple things seem clear. Number one, it is affecting entry-level employment without question. Companies are looking to, in particular in white collar, to fire. Morgan Stanley laid off 3% of their workforce a couple weeks ago after record profits. They wouldn't say AI, but someone came out in the New York Post and said, yeah, they're saying it's due to AI, but they don't want to say that. Why? Well, because you say AI when you lay everybody off, the rest of your company is going to go, oh God, and they're going to start sending out their resumes. So none of them want to say that.
Not that they'll find a job. But.
Not that they'll find a job. But so I go back to one of my overriding themes of the last 3 years, which is AI and robotics are fundamentally incompatible with our debt-based monetary system. We will have a credit crisis for consumer. if AI keeps doing what it's doing. And I think AI is going to keep doing what it's doing. So that's how I look at it, rather than the companies doing it getting rewarded or not. I'm looking for the sectors that are punished first, and then how does that impact aggregate demand, et cetera.
No, that makes a lot of sense. So, it's one thing if, I guess, the Industrial Revolution or some of these other revolutions, they moved at such a pace, we'll call it a snail's pace, that the economy was able to catch up and not have major issues. But in this case, is the pace of AI development and disruption moving too fast and causing too much harm to youth and white collar employment, where there is no real remedy to halt what's coming or even blunt its effects? Like, we're going to just have to, take the medicine.
Yeah. I mean, when my working model for is China and the WTO. And I can tell you how that went. 35% of the manufacturing jobs in this country left, and they never came back. And so white collar has no idea. They've never had to deal with any of this. And they're going to have to deal with it now. And yes, eventually there is an adjustment period. But even with as fast as that was, that 35% loss took place over 6-7 years. It still was limited by the Chinese, how fast the Chinese could move, as fast as that was. This, to your point, the AI doesn't sleep. It doesn't need to go home and play with his kids. It doesn't need to take a break. It's like the Terminator. It's just going to keep coming, and it get better and better and better. And I don't know what the plan is. I've been privy to a couple conversations where our leaders absolutely know that this is an issue, and they don't exactly know what to do about it.
What's in their toolbox other than either regulating AI to halt its progress, which would put us, at danger behind China, or a UBI type, printing explosion that offsets the deflationary price spiral down for maybe cash, maybe for a basket of services or something else.
Those are sort of the options for right now. I mean, I don't know what else they do. It's moving so fast relative to, again, like, these people owe a lot of money, and in aggregate, how many tens of trillions, 10, 12 trillion in mortgage loans. Credit card debt's probably another trillion or two. Student loans, those are all owned by the government. Those can be forgiven. That's less of a big deal from a systemic standpoint. But there's, I have an advantage being in Cleveland, having seen this. I know how this goes. And, people in sort of the financial centers, they never really noticed, right? They haven't been to a lot of kids' funerals that OD'd on opiates, right? 1 million people died of opiates and by the way, it's human nature, right? This happened in Russia in the 90s. They lost their sort of meaning, and, a lot of people killed themselves. You go back to the 1870s, they started sort of hiving planes of Native Americans into encampments, and a lot of them drank themselves to death. And here in the Rust Belt, 1 million people died across the country over overdoses and alcoholism and suicide. And so when you take away people's meaning, there was an experiment even last year we wrote about. I forget who did it, but it showed it was the biggest UBI experiment ever. And basically the gist of it was UBI made people worse off, not better. In terms of educational outcomes and familial outcomes. And so, in the long run, I think AI, I think it's going to vastly improve our lives. And a lot of the tech people highlighting that are just kind of like, smoothing over how we get from here to there, right? It's like, well, other than that, how was the play, Mrs. Lincoln, right? Like,
we got to get there. Yeah. Sounds like between the sovereign debt crisis that's likely to come about because of the war and the closing of the strait, really, the closing of the strait is really the primary. And because of the speed of disruption at the hands of AI, it seems to me that, the takeaway is the Fed's going to be printing, and the Fed's not going to have a choice but to be printing.
Well, and right, you look at when the Fed has grown their balance sheet in the past, right? In the really big increases, right? 2008, oil was collapsing because it was the great financial crisis. 2020, oil was collapsing on its way to negative 34, whatever. Oil's $90. And by the way, the SPR is empty, or largely empty, right? I mean, part of the way we got out of 2022 was essentially we ran down our SPR to get oil prices down, to get our allies to stop selling treasuries to buy oil. So 10-year yields would stop going up. We basically used the SPR to bail out the treasury market. That's not well understood. But now we don't really have an SPR to bring to bear. And I'm just stunned that there wasn't more thought given to this. They say, yeah, well, we factored on the Strait of Hormuz being closed. Okay. And I keep coming back to the same thing. We're winning this, that. Okay, so the Strait of Hormuz is open, right? Well, no. Well, why not? Well, because we have the most powerful military in the world, and it's going to go well. And okay, and the Strait of Hormuz is open, right? Because of all those things. Well, no. Well, why not? At some point, there's a great Netflix right now has a Vietnam turning point in Vietnam, 5-part series, and there's this great portion where every day the Central Command of the U.S. military in Saigon had a press briefing, and all the press would get in there, and everyone's stationed in Saigon, and they listen to, hey, here's how many guys of our died, here's how many Viet Cong and NVA we killed, and we're winning. And after a while, it was like same thing every day, and yet things weren't getting better; they seemed to be getting worse. So Morley Safer and Dan Rather went to. They're like, screw it, we're going to go out and be with the troops in the field. And they got in the field, and the guys are like, we're getting our asses kicked. We're so pissed off. We're fragging our leaders. And, it's a little bit of that same kind of thing around it's a fascinating thing. Literally, it's all in front of our faces. Is Hormuz open? Yes or no? No. Okay, then why do we believe everything else? Right? There's something that is not being relayed to us about how this is going. We have all this military, all this power, why is that carrier so far away? Why, when the missiles started flying, did he go 750 kilometers out into the Indian Ocean? If everything we're told is true, that makes no sense. Why isn't he in there now opening it? There's only two possible reasons: gross incompetence, or it's too dangerous and they know they won't make it all the way to Karg. Those are your two options. That's it. That's it. So, for me, I keep going okay, and the strait's open, right?
Yeah, you're painting a picture here that is pretty bleak. And, the thing that I'm going to hold on to until, it's no longer possible to hold on to is that, we're going to get right up against the edge of that cliff, and humanity is going to pull back. Because that's what they do.
I'm hoping.
Yeah.
I mean, because they've dug themselves. I mean, when you kick a beehive or you kick a hornet's nest, the fight's not over until the hornets say it's over, right? Mm-hmm. You can say, hey, no. And the hornets are going to be like, we don't care.
Have you ever kicked over a hornet's nest? You're right.
I have not. I'm a little wiser than that.
Well, unbeknownst to me, I was working in the woods behind our house. My wife had this pleasant idea of clearing out a section, and she said, "Would you clear out that section?" And there was a hornet's nest in the ground underneath.
Oh,
yeah. So you're right. It just because I was running and saying no. It wasn't over until
I almost had one like that one time when I was a much younger man, and I think it was a Boy Scout service project, and we were just cutting down some weeds and stuff, and it was summertime up here, right? So you couldn't there was the ground, but then there were the thick weeds up to your chest, and I'm walking through, my buddy's stop. I'm like, what? He goes, look down, and you look down, and there was a hornet's nest the size of a basketball,
exactly
under there. And I literally almost walked right into it, which would have been bad.
I pulled it open.
Oh God.
I pulled it open thinking it was something she wanted me to clear.
Oh
because it
God.
was kind of mixed in with leaves and other things in the woods.
Oh God.
Yeah. So but my point is, it was not over just because I was running away, swerving and doing the stop, drop and roll and whatever I could think of. They got me. I got bit like 10, 15 times.
Oh God. Yeah. And in the case of Iran, like every day that goes by and that strait isn't open, their leverage rises. It doesn't fall. Unless we've got some sort of magic weapon, we're going to and who knows, we very well might have that. And, if that's the case, great. Now, this can be really bad outcome for the poor people that are in the way of that. I'm not talking about the soldiers. I'm just talking about civilians, right? You're going to have to kill a lot of civilians, but that'll kind of get smoothed over, which is a whole separate discussion. But yeah, every day that passes and that thing's closed. I mean, look at the nonsensical stuff we're getting. Watch Besant yesterday on Meet the Press. No, that's bad framing. We're reopening Iranian oil. So we're unsanctioning Iranian oil in the middle of a war with Iran. We are unsanctioning Russian oil in the middle of a war where Russia is helping target our assets and our guys. Oh, by the way, in the same way we were helping the Ukrainians target their guys, right? And the turnabout is sadly fair play. So yeah, the situation is more dangerous than I'm seeing on my screen. And that for me, ultimately, as an investor, as a researcher, makes me very uncomfortable.
You've expressed that, and it's definitely coming through loud and clear. And so, if we get more than a month out from here and we're into, we're still, is the strait open or closed? And it's still the same answer. And we start cascading, we're going to have you back on to discuss this sovereign debt crisis that could be unfolding at that time. This has been an incredible discussion with Luke. Before we wrap up, I just want to direct everyone interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. When you join the quickly growing community, you're going to receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the name of the report you'll receive. I'm positive that you've been enjoying the conversation that Luke and I have been having. Please let him know. Hit the like and subscribe button and leave a comment below the video. All right, Luke, we're going to wrap up here. Would you just share a key takeaway to leave with the viewers for them to keep in mind, and then let everyone know where they could follow your work, connect with you, and learn more about your company?
Yeah, this is both the hardest and easiest macro environment in a long time. It's the easiest because is the strait open or not? Yes or no? It's the hardest because, as what we've seen, which is, late last week, free fall in markets. Early this week, Trump says, "Hey, everything's great. We're doing a deal." Skyrocketing markets. So I think it's going to be tricky and political, but ultimately the only factor that matters in the very near term is that strait open or not. And if for people more interested in learning about our institutional and mass market products, FFTT-LLC.com and at Luke Gromen on X.
Wonderful. I'm going to have all that information up on the screen. And guys, just go into the description area. You can click on the links and get over to Luke and learn from him. He is the best. Luke, thank you for coming on to Metals and Miners. You're always so generous with your time and analysis and ideas, and I love to spend the time with you. This time's no different. I look forward to having you on sometime soon. And everyone tuning in, thanks for watching. Want to direct everyone interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. When you join the quickly growing community, you're going to receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the name of the report you'll receive.